Let's talk a little bit about your theme this year. It's called What's Next. Why what's next and what is next?
So what's next is that, so we're looking for faster growth in the future than in the past. But what's next is the
faster growth for the economy, faster growth for the stock market. What do you mean?
Economy. And what I think is that when you think about the turmoil that's taking place in the stock market now, and everyone is afraid, that's, and people have higher amounts of cash than they've ever had before. And in Europe, they have negative interest rates. People are so concerned. There's 18 central banks can't agree on what to do there. The interest rates in the United States have been going down of late. So the way I think about it is that the fear is evident. Yesterday, you had Jeffrey Vinnick on your show, and he was talking about how difficult it is for him to raise money. There's been money flowing out of active mutual funds for several years now, going into passive. In addition to that, someone like Jeff Vinnick, a superstar investor, he can't raise enough money to have a business that's viable. So it just shows you how concerned people are about the economy and how concerned they are about investing. They've done well for 11 years. Now they don't want to give it back. And so the way I think about it, though, is that the stock market today is pretty much the same valuation that it was in 1969. It's 16.6 times earnings. It was 16.5 times earnings then. Then was amidst turmoil. You had the cities on fire, the National Guard in the streets trying to keep law and order. You had the Vietnam War protests. So you have women's rights, protesting. So everything was a mess. But the thing that really sticks to me, and the assassinations of President Kennedy. I was talking in my office about, I have a lot of younger people in my office, and I said, tell me about the assassinations in the 1960s. And people said, well, John Kennedy. I said, anyone else? And they said, I don't know. It was Martin Luther King in 1968 and Robert F. Kennedy in 1968. They tried to get George Wallace. So there was turmoil then. There was a concern that the country was going to survive. But the stock market then was 1,000 on the Dow Jones. It's now 26 or 27,000, so 26 times. The economy then was 850 billion. It's now 21.3 trillion. That's up 25 times. So all you had to do was believe that this country was going to survive and invest then, and you would have made 25 times your money. And so I think that what's going to happen in the next 50 years, of course, I'll be 126 by then, and you can reach me at baronfunds.com. They will know where I am. But I'm thinking about the next 50 years is going to be similar to the last 50 years. That would be 25 times your money if you invest now. And even better is that interest rates today are 1.5%, 1.6% for 10 years. They're normally 4.5% for 10 years. You have platform investments now. So it used to be when I was young and you wanted to make money, you'd build a factory for $1 million or a hotel, and then maybe you'd make $100,000 or $150,000 after you take the risk of putting up $1 million. And but now you've come into a capital light business. Mm-hmm. You have technology, so therefore other people are giving you money, writing it off. You have a platform that you built. You could be a licensor, or people could be using your business in the cloud. And then all of a sudden you start getting revenues, and that revenue gives you 70, 80, 90% margin. That's worth more than earnings per share company.
Without having put up the capital,
right. Yeah, people finance
risk on for some of these things too. So you can do it.
Exactly. So it's capital light, low interest rates, and the technology. So technology is making businesses grow faster, and also it's making their costs be lower. And then knowledge. Knowledge is growing at the fastest pace that it's ever grown. And it used to be 100 years ago that knowledge doubled every 100 years. And then after World War II, it was every 25 years. And now it's every 18 months. And with the Internet of Things, knowledge is going to double, according to IBM, every 8 hours or 12 hours. Knowledge, humankind.
I love what you're saying, Ron. But when you look at our growth that we've seen to this point, a lot of people say our economy is just stuck in a slower growth economy. We're never going to be able to grow at a faster pace. We've seen it pick up a little bit over the last several years. But why isn't it reflected in the numbers? Why isn't the economic growth stronger? Because you're right, information technology, all of these different ways of increasing our productivity, our knowledge, it's not reflected in the government numbers right now.
Well, people are afraid, well, you're in one of these, the economy doesn't go like this, it goes like this. And so as a result of that, whenever it goes down, people say, my God, this is it. This is the end. I better get out. And so all these people, so I watch show in the morning, and everyone talks about, well, the stock market is going to go up, it's going to go down, it's going to go sideways, economy, I'm worried about a recession. Everyone's worried about something. But the big thing to remember is what I was talking about before. If you invested amidst turmoil in 1969, you would have made 25 times your money. I think the 6.5% annual growth is going to continue on average for the next 50 years, at least. And then what that means is that Dow Jones, which is now 26 or 27,000, up 25 times, that's 650,000 on the Dow. So when people talk about, and the economy, which is 21 trillion, it'll be 500 trillion. Mm-hmm. So basically, when people talk about, well, the economy's a little slower, the stock market, I think it's going to go down 1,000 points or 500 points or 100 points. But if you're thinking about it's now 26,000, and it's going to be in 50 years, for young people, it's going to be 650,000 or 600,000. It's just compounding.